Hi there, good afternoon. You've tuned into ET now, and this is Closing Trades with me, Michelle D'Souza. Along with me in a short while from now, I'll have also Nikunj Dalmia joining in to talk about the markets and where the markets are headed. Given the fact that today we started the week on a very good footing, we are actually hopefully on the verge of ending in the positive territory. Just one more hour left to go for the closing for the day to come to an end. But as of now, as you can see, we are holding on to those gains. When you talk about the benchmark indices, it's Nifty Bank that has been actually outperforming the benchmark indices from the word go, and it is actually holding on to those elevated levels as well. Broader markets, on the other hand, as well, holding on to strong gains, outperforming the benchmark indices in today's trading session. While if you talk about the sectoral print, it is the IT sector that is under pressure in trade, along with FMCG and PSU banks. While on the flip side, it is pharma index that is seeing a strong up move above 1.5%. You have auto holding on to good gains, metal holding on to good gains as well in trading session. But there are a lot of pockets in the market that are actually seeing a lot of exuberance, and let's put the spotlight on those with our guest for today. We have Naresh Mirani as well as Kunal Bothra joining us on the charts, while Nishal Maheshwari is here to talk about the overall market setup. And very good afternoon to all of you. Nishal, let me come first to you and talk about the markets and get a sense of what are you making of this sort of a rebound. Do you think this is sustainable when you talk about the benchmark indices? Because most part of the correction of late, you actually hearing people talk about that it's already done.
Good afternoon to you and your viewers. Obviously, bottoms get made basically only in hindsight. And we'll only come to know basically maybe a month or two later whether the bottom was there or not. But having said that, yes, I think a lot of water has flown down basically the river, and that's why you are seeing some amount of buying coming in. So if you really look at it, two or three good things have happened, especially on the Indian economy front. You have got interest rate cuts, you have got tax break basically coming through, and you have got government spending. All three of them have been positive in the last 1 month, last 2 or 3 months. The only and a very big one problem is basically the international markets, and especially the US. So that's why the market is a bit jittery as yet. Having said that, I think we are in for some amount of pullback as we are seeing at the moment.
So that's the view coming in on overall market setup. Naresh, let me come to you. And what are you making of the way how the markets have behaved themselves today? Do you think that this is what should we start getting used to such sort of performance coming in from the markets now?
So the base formation is on slow recovery towards 22,800 is what I would expect. The breadth is getting better. We are not seeing downticks in a sharp way. Although we are not seeing a major follow-up on buying upticks, but crossing 22,700, 800 would be a positive indication. For now, your stop loss says shift to 22,400. So for now, the bias is positive for a near-term bounce.
Bias towards positive, rather positive bias towards a near-term bounce. But Kunal, keeping that sort of a setup in mind, what's your take coming on the broader markets? Because they've been hit the most. That's where the pain has been way too much when you talk about the benchmark indices. What's your take on that?
So in every bounce or every rally, the mid caps, the small caps, we've seen that they were the ones which have fallen the highest, and the recovery over there would actually be not the first, because initially we see the recovery coming back into large cap names, into selective themes, selective sectors. And then once the market gets a lot of confidence and the sentiment becomes positive, that's the time when you see mid caps and small caps, they tend to outshine and outperform. So I believe that we are far away from those kind of points, at least in terms of sentimental perspective, where the markets could get back into a turnaround mode. So I think it's time that one looks at the selective spaces. So I think even in the mid caps and small caps, in the last 1 or 2 weeks, when the markets or when the indices were down, there were a lot many stocks which were trading at swing highs. Some of them were at 52-week highs for themselves. So I think it's better to be very selective and try and look at this as individual pockets rather than the entire sector.
Nishal Maheshwari also joins us. Nishal, what's your gut call? I mean, do you think we have a durable trading bottom in place? I mean, it could be here, it could be 5% lower, but do you think this market has found its feet?
That's a question for me, Nikunj.
Sir, Nishal Maheshwari, good afternoon, sir. You don't recognize my voice these days.
It's not so. I think there has been some break in the voice, and
It's
that's
okay.
why.
You don't recognize. It's
I
okay.
do. I do agree, Nikunj. I think we are very close to the bottom. That's a feeling even I get. But as I was telling you earlier, that bottoms get made in the hindsight, and that's why I'm not sure actually that we have already made one, or maybe there's going to be another. Because I'm actually looking out for April 2, when the Trump's reciprocal tariffs get done, and that point in time, basically, you might get another a big fall, basically for the reason that even India will be a part of those reciprocal tariffs. So I would want to wait out for this month of April, basically, because I think a lot of this dust is going to get settled in the month of April. And then I think basically one should be pretty confident, because otherwise, we really look at it, Indian economy is back on track. Government is doing very good on its part. Basically, the three steps which I had spoken earlier. So government is trying its best to basically revive the economy. But obviously, these three steps which the government has taken will show up in numbers in the second half of FY26. So that's why post September, definitely the numbers on the economy side will be much better.
Banks are looking really strong, really strong. Kunal, can I say I told you so?
We discussed so.
Everyone, we said bye.
But I think today, for a change, even the IT stocks have started to show signs of slight recovery. I think it's a very small recovery, and that's because the nature of the indices and the stocks over there were extremely oversold.
Okay. Nishal, markets are down because earnings are down. Banks do well when earnings are up. So why are banks doing well when earnings are still low, economy is not bottoming out? We are still assuming that economy will do better. Last 2 years when economy was galloping, banks were not doing well.
So what will happen is basically, obviously, you were expecting another rate cut happening in April. So inflation is down, first rate cut has happened, the second one is what most likely to happen in April. So I think in a falling interest rate scenario, obviously the banks do well. And that's why we are seeing this time the rally is going to be led by banks very surely. The other big thing remains to be most of the mutual funds are underweight banks. And they will definitely come and maybe buy more. And if the mood on the FI side, given that the dollar index is now reversed from 109 to around 103, 104. So even I believe basically post this April thing, the FIs will also start coming back basically to the Indian market, because it's fallen quite a bit and the valuations are very attractive at these prices. So I think, and this time the rally would be led by banks. I feel strongly about that.
For me, this number is important. Imagine a scenario when FI buy for 3 days. What will happen?
Yeah, it'll be
Okay. That could happen, right?
It could happen.
It may happen. See, the average number of FI selling, why am I saying buying, which was about 3,500 crore in the month of Feb, perhaps 3,500 crore in the month of Jan as well.
Correct.
Has come down to 1,500 crore. It's become half.
Yeah.
Now, mathematically, there is no one who can tell you that, oh, this number will be 1,000 plus or this number can go back to 4,000. I'm just putting dots together. That what troubled us if those spots are getting over.
Yeah, the intensity of selling is dropping.
I mean, everyone said why FIs are selling dollars up. Why is FI selling? Why? Because money is moving into US tech stocks. Now, when both are down, then obviously it should reverse. But there's another graphic which we made, and which I think we'll spend a minute on this graphic, which is that if money is moving out of US, where will it move? Europe is rebound, China is tactical, India is structural. Now the color of the money is very different, even though FIs are FIs, but there are some ETFs who like to buy country. There are some hedge funds who like to buy tactical. There are some companies or some funds who like to buy structural. So if you look at that graphic, which we carried at about 212, I think you pretty much will get a sense of what I'm trying to say. But meanwhile, Nuresh, if this market is showing signs of life in large cap banks, how much more time before mid cap banks, they start coming back again? When do you think this rally will trickle back to, let's say, a Federal Bank or a DCB, or for that matter, a IndusInd Bank or a CUB?
Little more impactful move needed from the bank Nifty as such. And we've just seen relative strength via the fact they've not fallen as much as the Nifty has. So the Nifty Bank goes up another 5%, say it crosses 50,500. That would be a tough ask for now. But that is when we cross the recent swing highs of 5,500. That is the point of time you could see small cap and mid cap banking make a comeback.
I like the graphic, guys. I like it when markets go up. Everybody likes it when markets go up. Kunal doesn't like it. Do you like it when markets go up?
Why should I not like it?
No, I'm just asking. Maybe you're positioning is short, yaar. Who knows? There is a buyer and a seller, right? So every price there is a buyer and a seller.
Correct.
So every time markets go up, somebody feels bad that I've sold cheap. Every time markets goes down, somebody feels sad. So obviously, I don't know which side to trade you right now, Arun.
I'm on the positive side.
Okay. Yes, ma'am.
Nothing. I can see the smile on Kunal's face also saying that yes, I
क्या
am
करा
in
था
the
long? Nifty
positive
long
side.
करा था, Bank Nifty long करा था.
No, individual stocks.
What did you buy?
No, so I think Bajaj Finance, Finserv, that's the two names which you've been bullish on. Then we were also looked at, starting to look at Bharat Forge. That's something which is starting to look attractive in terms of the prices. Then you have, mid-cap names, lot many mid-cap names which start to look attractive. There are a few of the stocks which I've been recommending over the last couple of days, like home distilleries, etc. These are the stocks which I've been bullish on.
Right, a couple of stocks actually that Kunal is bullish on. I hope everyone's taken a note of that. But on that note, we'll slip into a break on this edition of Closing Trades. When we come back, we will actually put the spotlight on the auto space and actually get Nishal's view on the auto pack. So don't go anywhere.
In conversation with Kunal, Nuresh, and then good old Nishal Meshwari. Feb trade deficit 14.5 versus 19.4. 14.5. Why? What's benefited us? Either imports have gone down, or it is $5 billion. That means because the economy has slowed down, or gold imports have come down, or something. Let's see. We'll check tell our research team to tell us that why 19 has become 14. I think there was this whole gold base which must have kicked in. But trade deficit turning positive is always good news for India, always good news for currency, always good news for a lot of other sectors. Nishal, it's interesting that in this market comeback, and it's been a okay comeback from the lows, we've not seen Adani Groups participate, we've not seen Reliance participate, we've not seen Aditya Birla Group participate, we've not seen even Tata Group of stocks participating. It's only banks, that's it.
Yes, I think so, basically, because banks were the only place where the valuations were having a lot of comfort. And as I was telling you earlier, most of the domestic mutual funds were underweight bank, and I believe they are still continue to be hugely underweight bank. I know some of the funds basically were against the benchmark of 40%, they are something like 25-30% kind of. So I'm saying the that way the underweight is quite big for the domestic guys. So I'm saying this is a good time, and they must be accumulating, because this is a very good time for them to now do this.
Go back to that whole point that financials, let's also look at brokerages here. Let's also look at NBFCs here. Let's also look at capital goods names like, let's say, AMC stock, or HDFC AMC, Nippon AMC, UTI AMC. A lot of these stocks are actually listed right now. Nuresh, is there a trade coming back in any of the non-banking financial stocks?
One trade has been only in the gold financer names. That is one which we've seen a lot of strength. Other names, we keep seeing 1 day, 2 day moves. So something like an Aavas Financiers tried to make a breakout move. You are seeing a Repco Home Finance trying to make a base, or a LIC Housing Finance. Many of these names have not taken another leg down. So whether it is a L&T Finance, but we've not yet seen momentum come up. But there is a list of stocks which are close to making very tight ranges. So whether it is L&T Finance or AB Capital. So on radar, many of these names, once we see some momentum, they could see a larger bounce back. They've started making a 5% range. So NBFC as a space looks interesting. The larger ones, Muthoot, Bajaj have done well. The smaller ones could be on radar going forward.
Okay. What has gone up in last 1 hour of trade? Can we show some stocks which have gone up in last 1 hour of trade, please? Let's look at some stocks. So Nifty has done nothing. I don't expect Nifty to do anything special. but you make a base, it's like saying that आप एक base बना रहे हो. And if you start making a base, the more base you make, the more solid, markets would start becoming. Trend, by the way, is having a good day. Bajaj Finserv is having a good day. So Nishal Maheshwari, if you have to shop right now, assuming that this market is still on offer, it may not be one pay, one free, but there's definitely a 20% discount, 30% discount. And if you add the power of compounding, you may get another, add the power of dividend, you get another 2-3%. Where would you like to shop in this market with a 3-year view?
So obviously, I think banking is one of my favorites at the moment. So I would, I'm saying a good weightage goes to the banking. The other one which I would look at is rupee is at 87. And I think all the exporters are going to make good money out there. So both IT as well as pharma, I would be positive on both of them basically at these prices. I do not believe there's going to be serious tariffs coming on the pharma side because US is anyway deficient and Indian pharma is much cheaper than anything to be manufactured in the US. So I do not see much reason to be bothered about the pharma and IT sectors. So both of them definitely IT has already fallen quite a bit. So these are the other two sectors I would look at. The other one which now I see a bigger trend now emerging is basically on the interest rate scenario. So I think once the interest rate, one cut has happened, another cut is likely to happen in April. And if the inflation continues to be like that, I see another 1 or 2 more cuts in the current year. So I think interest rate sensitives are going to start doing well. So autos, housing finance, I think all these companies will start making sense.
IndusInd Bank, Nishal bhai. I've asked a question about a bank which there are a lot of people who say no. There are a lot of people who say yes. So are you part of yes? Are you part of no? Because there is a very binary view in IndusInd Bank. With IndusInd Bank, you have to either love it or hate it.
I would avoid it, Nikunj. I don't think so. There is any reason to buy IndusInd because I think every other bank is so cheap. Why you want to actually get into a bank where there is still things are going to be known fully maybe in the next 2 quarters. So there is no reason for you to actually go out and do it. You have got an SBI basically, which is available at similar kind of valuations. And I'm saying Kotak Mahindra, HDFC Bank, and the smaller ones basically also Federal and all. I think there are a huge number of banks which are available at very reasonable valuation. So there is no reason for us to actually get into something where we are not clear as yet. Yeah, once we are very clear, basically that the problems are over, then I think one can go back and look at IndusInd again.
Right. Kunal, I wanted to come to you. You did speak of the fact that Bharat Forge is something that you're liking right now. What about the entire auto pack? In that auto pack, one Bharat Forge being the auto ank is something that you like. But what about two-wheelers versus four-wheelers? Which one is looking good to you right now?
So very selective over here. For example, M&M is the one which is looking strong. There are some bouts of recovery which we are anticipating in the likes of Escorts, for example. That stock over the last 1 week or 8-9 days to be precise, I think has been showing signs of a bullish RSI divergence. It's trading below the below all the key moving averages. That makes the trade a lot more potentially attractive. Then you have the likes of Bajaj Auto, Hero MotoCorp from the two-wheeler pack. These stocks have been huge underperformers. There's been like a 40% to 50% correction from these from the 52-week highs for these stocks, and then almost like a 7 or 8 consecutive month of price correction into these names. So we are looking out for points when there is bound to be a short covering mode into these names. That I believe could probably lead into at least a 5 to 10% swing upside into these stocks. Tata Motors is the one which is still struggling. But the stock seems to apparently have formed a short-term base around the 600 to 650 mark. So it's very, very stock specific over here. There's nothing which is emerging into the auto pack as more of a consensus trade, whether it's two-wheelers or four-wheelers.
All right, so that's the take coming in on the auto pack. Niresh, what about metals? Because all of a sudden everyone's liking this particular space given the fact what is happening to dollar index, what's happening to China. Our charts also signaling a big buy sign.
So out of those names, one which has clearly given a reversal is Tata Steels, which has seen a good move over the last few sessions, and also volumes have been decent. So that is one stock. Another one is Hindalco. So metals as a pack, two names which have clearly shown relative strength and also have global exposure. That would be Tata Steel and Hindalco. Hindalco closer to 660 to 670 would be a good entry point.
All right, so those are some of those metal names that are looking attractive. Nishchal, let me ask you a question on basically which side of the fence are you when you talk about your India allocation? Should it be a Build India sort of names like which were erstwhile your capex related theme, the ones that have infra exposure, or would you be on the side where Consume India theme, which is your consumption plays? If you had to choose between these two, which one would you which one would be your go-to space?
I think at the moment, basically, consumption seems to be more more in favor. And I would actually put a 60-40 kind of a thing, more on the consumption side. Banking is also consumption, FMCG. I think with the government cutting the taxes, basically, as I was telling you, basically all these efforts which the government is taking will show up in numbers in a couple of quarters. So this is a good time to start looking at for all the consumption side of the basket. Anyway, on the capex side of the basket, basically the valuation is still very aggressive. Yes, there is going to be good growth there, but I think the valuation is not corrected as yet for my comfort. So I would want to hold on and maybe build up on the consumption side of the story.
Right. So consumption side of the story is what you would bet on when you compare it, at least with the capex related theme, because the valuation there still seems to be a bit stretched. On that note, thank you so much, Nishchal, for joining us on the show to talk about the sectors that are looking attractive. Definitely banks is featuring on Nishchal's list as well. But Kunal, let's talk about the closing trades and which stock is featuring on your list today.
So that's Trent, and interestingly, the stock forming a classical double bottom on the line charts, where it's trading above the 5100 mark currently. So any move above the 5200, 5250 levels for the stock could confirm a decent swing breakout as well as a trend over the very near term.
All right, Trent, that's a buy call coming in, or that's a closing trade from Kunal. Naresh, what about you?
So that would be a buy on Bajaj Finserv. Today the stock has seen good volumes as well as close to testing that 1920, 1940 previous high and could go break out in the coming days. So that looks interesting for a breakout move going forward.
That's Bajaj Finserv coming in for Naresh. Only 30 minutes left for us to actually shut shop for the day. For now, if you look at it, you have the Bank Nifty that is actually climbing to the day's highest point. On that note, we'll slip into a break. When we come back, we'll talk more about the markets. Don't go anywhere.
India is holding talks with US virtually to follow up on the Trump-Modi meeting. The Commerce official, this first time we've got something from the Commerce Ministry. India is holding talks with US, which is US government here, virtually as a follow-up to the Trump-Modi meeting, which happened, when did it happen? That happened actually in February 14th, 15th.
Yeah,
14th, 13th actually. 14th Prime Minister came back.
Yeah.
So 13th, it actually happened, right? Yeah. Good. So there you go. You've got this first comment, which is coming source based. I'll see if I can get somebody from ET now to again, get something on it. Nishchal Maheshwari, till how long do you think markets will be bothered about this entire? Nishal's not there. Never mind. Kunal, let's say there is a trade coming in Europe. So Naresh spoke about Tata Steel. Can I say anything and everything which has got to do with Europe? Indian companies in Europe, directly, indirectly, that becomes a trend buy right now. Motherson Sumi, JLR, which is Tata Motors. If you're exporting out of Europe, maybe Bayer, maybe a Monsanto. European companies which have a presence in India, Indian companies which have a presence in Europe. How about that as a trade?
Yeah, a few of them. So chartically, I'll probably look at, say, Tata Steel as one of the strongest bet over here, because what aids the move for Tata Steel is, of course, also dollar index cracking from 110.
Europe comes back, Tata Steel comes back. Simple. Yeah. I mean, no questions.
Yeah, no
Netherlands
questions.
and Chorus, they both.
Tata Motors is the questionable one here, because I still believe that the stock is yet to complete a phase of a major price-wise consolidation as well as a price correction. Not a major price correction, but I think more of a time-wise correction. It has to spend some time at these levels of sub 700, 650 thereabouts, maybe another couple of months at least. That's where I would believe that there could be better opportunities which could be available. Motherson Sumi, I think that stock is still into a downward trending mode, so would not be bullish on the stock at current levels.
Mayuresh Joshi joins us. Let's take a conversation forward. Mayuresh, The question which we are deliberating and discussing is that do we have a durable trading bottom in place for the market now? And it will take a lot of global bad news or local events to break that recent low.
Afternoon, Nikunj. I think we have been analyzing a lot of aspects, including how the gap between the bond yields and the earnings yield have probably panned out over the last 10 to 15 years. And in terms of this narrowing of spreads, we are below the long-term averages. So to a certain extent, the market is trying to pencil in that earnings should start reviving at some point of time as we head into the first half, both as a combination of better monsoons aiding rural recovery and consumption's improving because of the tax cuts that we've probably seen. So base case scenario getting worked out, that the first half of the next financial year, earnings should start bottoming out, reflecting in probably the spread narrowing as well. The second aspect obviously has been in terms of the previous and the past corrections as well. And the periodicity of this correction, obviously, I think from oversold zones, we've probably come back to a large extent. But to a large extent as well, I think all the previous falls that we've probably seen, the kind of battering that has happened across the small and mid-cap space, I think the kind of fall that we've probably seen in terms of price damage, selectively, I think a few pockets within the mid-cap universe have started probably looking attractive. And last but not the least, I think in expectations of Trump tariffs and tantrums as well, what probably happens in terms of global economy, global inflation, core inflation itself, and the interest rate cycle, I think the markets have penciled the worst probably in. And therefore, I think within the emerging pack, India's earnings should start bottoming out. Indian macros probably better than the rest of the emerging economies. And therefore, I think India should do well. But the bottom is in place. But it probably looks like a large part of the price damage has already been gestated by now.
The other group which is suddenly looking strong, Naresh, are some of these Adani group of stocks. I can see them, they're coming. I mean, they're not roaring. They're not going tom-tom. They're not going crazy. But from the recent lows, which is, let's say, an Adani Enterprises, Adani Green, Adani Energy, Adani Ports, they're showing signs of life. Naresh, is there a trade in any of the Adani group of stocks?
So most of these names have started making a similar bottom. So one which comes clearly is Adani Ports. Almost 4 bottoms around 1050. 1160, 1180 has been the top for the last almost 3 months multiple times. If it sustains above those levels, looks interesting. Similarly, Adani Enterprises itself has made the same bottom around 2050, which was the low in November. Also, roughly, this was the low back in November of last year as well. And this is where there was a big base also in 2023 after the fall. So if that starts sustaining about 2300 levels, that could be interesting as well. So Adani Enterprises and Adani Ports is what could be tradable out of the whole segment.
That's about the Adani group of companies. In fact, let's stay with that theme because Macquarie as well as Cantor both have come out with their initiation note where they initiated coverage on Adani Green. My colleague Varun is here to tell us exactly what both the brokerages have to say on this company. Varun, over to you.
Well, brokerage houses are turning bullish on Adani Green. Macquarie and Cantor both have initiated coverage on Adani Green with a good outperform rating. Let me start with Macquarie first. They have initiated coverage with an outperform rating and a price target of 1200. They say that India plans to triple its overall renewable energy capacity till FY30 and Adani Green is going to play a leading role in the transition of Indian energy sector with a capacity of 50 gigawatt by around 2030 from 12 gigawatt currently. So this implies a CAGR growth of around 25% in the next coming 5 years. Also, they expect the company to generate around $1.8 billion of annual operating cash flow against a cumulative capex of around $10 billion till 2030. Despite this heavy capex, the net debt to equity for Adani Green will reduce from 7 currently to around 5 times till FY30. And also they say that the valuations are attractive. Now, Cantor has initiated coverage with an overweight rating and a price target of 1222. They say that the growth for this company has just started and there are several tailwinds for the company that will help in the overall growth. They expect the capacity to increase 4 times in the next 5 years, and from FY25 to FY30, they forecast the revenue and EBITDA to grow at around 21 to 26% CAGR in the next coming 5 years. Also, they say that the valuations are attractive. The stock currently trades at around 15.6 times FY26 EV by EBITDA, which is actually lower than what its peers actually command. So valuations are attractive and the overall growth story for this company is very good, and that's the reason Cantor and also Macquarie have initiated coverage on Adani Green with a price target of over 1200.
All right, moving on to an exclusive now. The government is planning to give a fresh push to promote domestic manufacturing of solar equipment and has revised norms regarding the use of solar PV cells. So what is government trying to do? Well, India is abundant in hydrocarbon. No. India is abundant in solar, which means that the raw material for energy is solar that is available for free. We are not self-sufficient in hydrocarbon. Hydrocarbon is fossil fuel, which means India is trying to now ensure that our global dependence on oil, which is a source of energy for us, goes down, and our dependence on solar becoming prominent is high. How is solar generated? How is solar power generated? I mean, if you're traveling next time, just look up and there are a lot of rooftops have these solar modules. Those solar modules are actually the source of solar energy. I'm really making it simple so that our viewers can understand it, right? Pardon me if you know it, but I'm still trying to make it simple. China is like the good place where all solar manufacturing is done. And in China also, today the cost of making solar modules is cheaper than India. But government of India, in order to promote the industry and promote innovation and ensure that we just don't stop at solar modules, we go to cells, we move to wafers, we move to ingot, and we move to battery, they're trying to protect the domestic industry. Now, government cannot force a private player to buy, but they can certainly come with an intention where they can promote government projects to be fired or to be backed by local manufactured modules. And Prakash is standing literally in the sun and he's doing a solar story. So Prakash, you there? So Prakash, I mean, that is the spirit I like, right? You're doing a story on solar and you're standing in the hot sun in Delhi and doing it.
The government is providing a fresh push to promote domestic manufacturing of solar equipments. In fact, a strategy has been put in place to encourage domestic manufacturing of solar PV cells to meet domestic requirement, which is likely to cross 60 gigawatt by 2027. And therefore, several steps have been taken by the government. Ministry of New and Renewable Energy has revised norms for using solar PV cells in renewable energy projects. In fact, norms have been revised to mandate use of domestically manufactured solar PV cells in government's flagship schemes. Ministry of New and Renewable Energy has classified certain category of silicon wafers being used as a raw material for manufacturing of solar PV cells as a domestically manufactured solar PV cells. A very significant development coming in. Classification will, of course, provide clarity to the domestic manufacturers. An official order has been issued by the Ministry of New and Renewable Energy. It has been informed to the manufacturers enlisted in ALMM list. Along with that, NBFCs such as SECI and IREDA have also been informed by the government.
All right, thank you so much for that, Prakash, for giving us this exclusive story that the government is planning a fresh push in order to actually promote the domestic manufacturing of solar equipment. We have a couple of them that are listed entities that we need to watch out for those, whether they stand to benefit from this one or no. But coming to you, Mayuresh, I want to understand your your view, especially on this entire theme, the renewable energy theme, the fact that the government push and the impetus is on that particular domain out and out. What's your take on that, and which stock do you like in that space, if you do, that is?
So two aspects, I think. The intent of the government is obviously there because they need to get the renewable capacity to 500 gigawatts over the next few years, and a large addition of that will be solar. But I think hydro and hydel plants, specifically small hydro plants, might do exceptionally well, in my opinion, again, in specific areas of operation itself. And therefore, a lot of the equipment manufacturers or the EPC players for either solar or hydro or renewable as a space might actually do well. The second part of the equation is also the flue gas desulfurization players. Because as we head over the next few years, and the deadline has obviously been extended till March 26, maybe it gets extended 1 year more. But that's a 1 lakh crore market out there. Only 10,000 crores worth orders have been meted out. Very few players that can actually make this equipment so that the existing thermal plants don't pollute. And therefore, looking at the climate emission norms, I think this segment of the market, along with renewables, specifically the small hydro that I was talking about, can actually do well. So within the FGD players, I think players like a Techno Electric, as an example, has a good mix in terms of FGD equipment, smart meters, and therefore they are in the right spaces as far as government capex layouts is concerned. Obviously, I think with the correction that we've probably seen, would like them to make good sound bases. But I think these two spaces might actually do well as far as energy as a space is concerned over the next 3 to 4 years.
Mayuresh, there's a debate which says that everything which moves on wheels will be electric. There's a debate which says that everything in future will not be EV. Maruti is saying that I will do hybrid. Mahindra is saying that I will still roll out EV. Who will be the winner in this entire EV space? I mean, there was once upon a time we thought Ola is the ultimate EV company. Today it's gone to 45 rupees. There are so much of yes, no, I don't know in the entire auto EV space. Who will be the winner?
So Nikunj, honestly, I think over the next few years, electric will dominate. At what time periodicity, I think very difficult to say. I was going through a global auto report, which is probably seeing signs of stagnation probably happening, even as far as the electric market is concerned, whether it's Europe or even North America to a large extent. And therefore, the adoption, obviously, with respect to pricing, with respect to infrastructure, largely related to charging of these vehicles, and the changes that happen in terms of both batteries as well as the powertrains, as far as electric vehicle platforms are concerned, are going to be very, very evolving. So I think the kind of R&D spends that have been done and are being done, I think there will be significant amount of incremental capex that will keep on as technologies evolve. Having said that, I think specifically for a market like India, I think we're still evolving as a space. And like power, where we're not directly going to go into renewables over the next few years, thermal will still stay put. Even for automobiles, I think the electric engines will obviously take precedence over the next few years, but that will be restricted to certain urban pockets. In semi-urban and rural areas, I think it will still be the internal combustion engines, the petrol and diesel cars that we are talking about, of the hybrids that will come to the fore. And therefore, I think a stock like Maruti, just as an example, which probably has a clear-cut advantage, both in terms of creating hybrids, in terms of electrical mobility platforms as well, and the internal combustion engines with very, very attractive price points, the dealership network that they've got, the service stations that they've got, and after-sales service as well, might actually benefit in the Indian ecosystem. So whether Tesla comes in, I think certain urban pockets might do well, or the M&M launches that you've probably seen. But consistency over the longer period of time, I think Maruti has the right mix, in my opinion, to cater to all these segments over the next few years.
11560. Anybody wants to guess what was Maruti's price when it went public? Who wants to guess? Mayuresh, I think, knows the answer. Kunal? It went public in July 2004. Let's check. Little bit of Google. Let's see who beats.
It's like fastest finger first who was
125.
able to
July
land
2003.
2003.
2003.
Yeah.
2003. June or July?
July.
July, yeah. I mean, that much I don't remember. 125 rupees.
Yes.
125 rupees, guys. 125 rupees is when Maruti went public. It was India's number one car company then, and it is India's number one car company today. The point I'm trying to say is that the leader always remains leader. And looking at Naresh's expression, he does not own Maruti. Otherwise, he would have laughed if you bought at 125, right? Naresh?
Waiting in the markets back then, sir.
Just think about it, guys. Just think about it. You know how a simple business which is built around efficient car, affordability, moving up the value chain, efficiency, ups and downs have come. COVID has happened, demon has happened. There have been issues about their inability to move into EV. There have been issues around they've been selling a lot in terms of royalty. That's another great company. Second great company which we met, I think 10 days ago, was Jubilant Foodworks, another great company. I think it went public in 2008. 2009, I think. 2008, I think went public. It was 2009 it went public. And you add back the bonuses, you add back what has happened to the stock, I think it's all like a 20x. 2009. They sell 40 crore pizzas a year. 40 crore pizzas a year is what they sell. And there you go, 2, 4, 5, 6. So it is 24 times. Mayuri Joshi, you never told our viewers to buy Jubilant Foodworks. Why it is that you never told our viewers to buy Jubilant Foodworks? Just buy a pizza company and keep it. 24 times in what? 15 years? 24 times.
No, I think there have been phenomenal moves, Nikunj. I think no two ways about it. But I think the important crux now here is that the changes are happening very, very fast and are evolving very, very fast as well. So I think the modes of delivery are also going to be very, very important as far as a lot of these consumer chains, consumer discretionary products.
Bit of a choke there. Never mind. So, Kunal, today we'll not talk about today, tomorrow. Tell us one stock which you think I will keep it for 5 years. Doesn't matter what tariffs are, doesn't matter who the Prime Minister of, who the President of America is and what he has to say. I will buy the stock for 5 years. Which is that one stock?
So there are two charts which are looking attractive in that sense. One of them is a mid-cap name. It's something which I've been tracking over the last few weeks. Hikal. That's a stock which I think is around 370, 380. Yeah,
it's run into rough weather because of a family dispute.
Yeah, so that's on the chart, which is looking very attractive. And the second one is, which again very recently has been on the news flow. That's Castrol. That's around 230, 235 thereabouts. That's also another thing which is looking.
It is looking good for 5 years.
Yeah, for 5 years, long-term charts.
Muresh, you love to do that analysis, right? I mean, look at bear market survivors, look at stocks which have not trended. Which are two stocks you like to buy for 5 years? And Muresh Joshi, I'm coming right to you. So please get that list ready. But it is Nuresh first.
So I'll go with a name which I like right now as a survivor is KRBL. That's a stock which has been at the same price for 10 years. I hold the stocks or standard disclosure here. The stock is available at the lowest valuations, the same price as 10 years back, and a non-disruptive business, available cheap, and the stock has been consolidating sideways for the last almost 1 year as well. So 1 year, 5 years, 10 years, gone nowhere. But this could be a stock where downside is limited, but could be a surprise over the next 5 years.
Mayuri Joshi, your two stocks for minimum 5 years, but the condition is that it should be at least 3 to 4x in 5 years. That's a reasonable time frame, right?
Sure. I think I'll hazard a guess here, Nikunj. So I think Kotak Bank, out of the large names, our take is that there should be decent growth that probably happens as far as banks and financial institutions are concerned. And in our own estimates, Kotak can actually deliver significantly as far as most parameters that banks normally do. So whether it's advances growth, reasonable amount of deposit growth, stable NIMs, asset quality and credit underwriting should be top notch. And again, I think in terms of the return ratios should be right there at par with the best banks in the world. So our own sense is that Kotak might actually deliver phenomenal numbers over the next few quarters and years. That's the large cap name that we probably like in terms of ratings and rankings. Out of the mid cap space, I think Welspun Corporation is something that we continue to like over a longer period of time. I think two reasons out here. One, I think in terms of the core business itself, they are among the top 3 globally as far as the line diameter pipes are concerned. The kind of capex that will go in, whether it's North America, whether it's the Middle East, or whether it's India specifically for oil and gas, whether it's for sewage treatment, or whether it's for water, I think a large part of the capex is going to continue over the next 3 to 4 years. And therefore, the incremental order book that they probably set out at around 15,000 crores should keep on improving in every passing quarter. Again, the margins and I think that should show significant amount of operating leverage. And therefore, with the opportunities coming their way and the operating leverage that they probably create, the return ratios should be significantly higher every passing year. So our sense is that macros and micros, both locally and globally, should probably support Welspun.
Point taken. Those are some of the counters that are looking attractive for the next 5 years, according to Mayuresh. But thank you so much, Mayuresh, for joining us on the show and giving us, sharing those topics of yours, as well as talking about the markets. But as we wind down for trade today, before that, Kunal, I want your BTST ideas.
So I'll go with buy on Jubilant Food, the short-term target of 660, stop loss at 580, and Bajaj Finserv is something which is still looking attractive at current levels, targets of 2000, stop loss at 1800.
Bank Nifty is looking impressive. It is. Let's look at the YTD chart actually for Bank Nifty and the Nifty. कहते हैं ना वो HDFC बैंक को देखिए, भगवान के घर देर है अंधेर नहीं है, right? Everyone is saying when looking at HDFC Bank, we told you so. एक दिन समय आएगा, right?
हाँ आएगा.
ऊपर वाला देखता है. इसमें वैल्यू है. इंडिया सेकंड लार्जेस्ट बैंक एक्चुअली. देर है मगर अंधेर नहीं है. It's a nice tagline for HDFC Bank. For HDFC Bank shareholders. Right, Mayuresh, you'll agree with me? Mayuresh? Nuresh, you'll agree with this tagline for HDFC Bank?
Apna time aayega is the.
It's outperforming, Kunal. I mean, on a real serious note, that it is outperforming the Nifty this year, I think. Can you share that? Can you just have a look at it? I mean, I don't remember it that much.
Yeah, so I think for a YTD basis, it's 3.5% down for HDFC Bank, and Nifty is down 4.5%. Yeah, relatively.
Nifty is only 4.5%.
Yeah, 4.5% on a YTD basis.
That's a percentage. Okay. Which is outperformance, no? For HDFC Bank, which I think in 3 years has given you returns which are significantly lower.
Correct.
Okay. All right, Sneha is ready, right?
Yes, Sneha is ready.
Let's go to Sneha, and she's going to sum up the market from that big wall right in our
Well, absolutely. Let's take a look at how today's trading session has panned out. We've remained more or less range bound, but nonetheless, we're towards the upper side of the range where we are closing right now. Above the 22,500 mark is where we are at on the Nifty. 0.5% uptick coming in on the spot basis. So looking very healthy coming in for the Nifty 50 today. Sensex also 0.5% uptick in tandem with the Nifty. So looking good for the Sensex as well. Nifty Bank has also recovered quite smartly from the day's lowest point, and on a spot basis, a 0.6% uptick coming in for Nifty Bank. So looking rather solid on that front as well. It's the broader markets that have been tapering slightly because you have the Nifty mid-cap index that has cooled off from the day's highest point. Nonetheless, a 0.7% uptick coming in, and the small cap index has also simmered down quite a bit because at one point of the trading day, it was up by 1%. Right now, it's a 0.5% uptick coming in, but no complaints here because we're closing the day overall in the green. Advanced decline ratio, however, very steeply in the favor of the declines. On the back of that, we had seen a spike in India weeks of 2 or 3%, but that also seems to have cooled off right now. So India Wix, okay, it's back at 1.5% uptick. So well, that's where India Wix is, but we're looking good on India Wix as well. Now, sectorally, let's take a look at what has done well today. Through and through, it's been the day of the pharma sector because you have names like Dr. Reddy's, Granules, Biocon, Alchem. Remember, zero observations coming in for Alchem, Shilpa Medicare, so all of them looking good. New launches coming in for Lupin and Zydus, and zero for observations for Zydus as well, so that is also looking very good. So all of these names, gains between 1 and 2% for all of them have buoyed the Nifty Pharma Index today. Nifty Auto, Metal, Bank, Energy, IT. IT has ended rather flat. On the flip side, it's Media, Realty. Realty has managed to slip into the red, and PSU banks also, last I checked, it was in the red, but Media also in the red right now. 1% cut coming in. Realty 0.3% lower, and you have 50 PSU banks that's also 0.2% lower. So that's where we're standing in terms of sectors. Very quickly, a couple of stocks that were in focus today on the back of brokerage notes coming in. Adani Green, Macquarie's maintained an outperform. Cantor has initiated coverage with an overweight, so very healthy moves coming in on Adani Green. 2.5% uptick coming in on that front. Other than that, a couple of other stocks, HCC, that JV has won an order of 2,191 crore rupees. HCC did well. Ola Electric, a stock to talk about, that was down 6 or 7% on the back of that petition, and insolvency and bankruptcy code has been filed. Muthoot Finance, 1 lakh crore a gold loan AUM cross, that stock did well. And lastly, let's also talk about Bharti Airtel, that was in focus on the back of Ericsson, Volvo and Airtel. They've announced a research collaboration. Quickly just highlighting the auto sector because you had Maruti Suzuki, and now reports also suggest that Tata Motors has followed suit in high prices. But that's how we're summing up the day in today's trading session. You have 0.5% uptick coming in on Nifty 50. 22,514 is how we've shut shop for the day.